stages, it's all art. It's not a science, right? There is absolutely no data you can read. There is nothing that will predict the outcome of the future. You have to be able to be worldly wise in terms of general knowledge. What's happening, where is it happening, when is it happening, and do you think this will work? Fundamentally, there are three things you should look at, right? Saying, is the problem really large to be solved for our country over the next minimum 10 years? You have to have a minimum of 10-year horizon of saying, can this be a $1 billion total addressable market? We call it TAM in our industry, for you to be able to go into this. If it's not, please go out and do this. The second thing you should look at is the team, right? And in the team, I'm not going to talk about IIT, IIMs and all that. Obviously IIT, IIMs like Arpit Agarwal and this and that are very smart, but that doesn't predict success. What predicts success is fundamentally, do you have the tenacity to build a business and go through tough years for 10 years of your life and not give up? That's it. That is the single most important determinant of success for an entrepreneur. Finally, you need to look at what is competition. A lot of people, when an entrepreneur comes and pitches to me and says, I have no competition, I'm like, thank you very much, goodbye, good luck. In India is the most competitive market in the world, if I'm allowed to say that, right? Remember one thing, if you are thinking of an idea, you can be rest assured that 100 other people are thinking of that idea. 50 out of them are serious. 10 out of them have started that idea in some form or the other, and 3 of them are actually competing with you in some part of the country. So if you've not heard of them, that just means that they're not big enough yet. But that doesn't mean that there isn't competition. You have to be very, very clear who's coming, where are they coming from, what are they doing, who's raising how much money, and therefore what will be your sustainable advantage. The simple question you need to answer is, if 10 people come into this market, will I still be the leader? Will I certainly have a right to win in the product that I am building, and why? It's a very, very hard question to answer, and if you can't answer that question in one line, as they call the elevator pitch, if you can't answer that question in one line or 10 words, then your pitch is not good enough, or your business or your idea is not good enough. So it's a pretty high bar that you should set for yourself, both as an investor or as an entrepreneur when you look at this. And I must insist that you have to build a portfolio, right? This is not like buying blue chip stocks on the public markets, right? It's not like saying, I bought TCS, I bought Reliance, I bought HDFC, I'll be fine. Right? It is not. It is like buying the lowest of the small caps that you've never heard of, and not knowing whether that company will survive. And therefore, most people don't understand this. What they do is they'll do 1, 2, 3 investments at most. Then they'll wait for it to give them a return. Now, what you must understand in angel investing is 2 things. Your probability of success, if it's more than 25% of your portfolio, which is 1 in 4 or 1 in 5 companies succeed, you are doing extremely well. You will be amongst the most successful angel investors in the country. Right? That's the hit ratio for angel investing, and therefore you need to build a pretty large portfolio in terms of width for you to be able to hit the probability of that success. Taxation and regulation, right? Our country is not yet, I would say, extremely investor friendly. People don't understand what angel investing is. If you talk to conventional CAs that have been running old books and old companies and your parents' companies over the years, they'll say, "Ye kya hota hai? You're putting 1 crore of rupees in a company which doesn't have 1 rupee of revenue. I don't understand how to even value this company. Everything is negative net worth," right? And things like that. But so therefore, how do you think about taxation? What structures do you invest in? Do you invest through a company or an LLP or your private books? You now have to declare in your private books every investment along with the PAN number, along with your number of shares that you hold, along with there's something called a pass-for filing and stuff like that, where they re-verify all of these things. So it's no longer an industry which is unregulated. So the government understands startup funding very well. Government wants to know that you are a legitimate investor that's making legitimate investments and is tracking all of that. So please think about where you're going to invest from and what the taxation rules. Talk to your CAs and all of that, what the taxation rules are when you exit. Because private market exits have different short-term capital gains and long-term capital gains that are applicable to you. Right? And short-term in this industry, if you get super lucky, like I just went into a company about 6 months back, and that company is giving me a 2x return in 6 months, right? Which is like a 400% return theoretically, right, from an IRR perspective. Sounds damn good, but then what I figured is I have to pay a 40% tax on that because it's less than 1 year. But then my return goes down to 2.6x or whatever, or less than 1.6x or 260%. Then I said maybe I don't want to sell it. Maybe I want to hold on to it and see if it's another 2x from here and I pay only 20% tax. That might be worth doing it. So that's the other thing that you should think about, right?
What is the role of a VC on a cap table? The advantage that people like me have is that we are full-time into this. And the disadvantage that we have is that because we are full-time into this, there is an inherent assumption by everyone else who's on the cap table, especially angel investors, or it could be smaller funds, that if the company requires help, company requires time in terms of strategy, in terms of product market fit, introductions, etc., it will be largely the lead investor's job. So all of you who are looking to be lead investors some point in future should please understand that there is an inherent assumption that you are looking to work with the company as compared to investing in a more passive manner. A lot of people currently invest into companies and probably don't even think about them on a daily basis. That is not the job that I can do. As an institution, my responsibility is to invest and manage.
And think about how you can help your company. I think what entrepreneurs are looking for today are looking for investors that can help them, not ask them inane questions or hard questions, but actually also present solutions to them, right? Because the entrepreneur is very lonely at the top. So you have to be able to add value beyond your capital. Everybody is now looking for sort of smart capital as you go out and do this, right? Right? You have to be able to compound. The power of compounding, like they say in the interest rate world, is the same in the startup world, right? It really compounds.